Welcome to Inside Outside Innovation, episode 58. I'm Victory Clafter. For today's episode, we're bringing back an interview with Christina Bechold from Samsung Next Ventures and founder of Empire Angels, a venture capital firm based in New York. She shared insights she's gained about the differences between corporate and private VC funding and how to navigate the dynamics when a startup fosters a relationship with a corporation. You can find her contact info in the show notes. You can hear more from Christina at our Inside Outside Innovation Summit, where she'll be a speaker amongst others such as Simone Ahuja, Tristan Cromer, Janice Frazier, Paul Singh, and Jonathan Bertfield. The I.O. Summit is where you can go to learn more and find your ticket. Now, let's get started.
We reached out to you because you've got a lot of experience in this investment space, specifically around corporate venture, and wanted to talk a little bit about, how did you get into this space? How did you get into early angel investing? And then more importantly, how did you get into the corporate venture space, and what differences are you seeing between those two worlds?
Sure. So I started an angel group in New York for young professionals about 4 years ago called Empire Angels. It's now a group of about 70 people in their late 20s, early 30s doing seed stage investing together. We have a fairly large portfolio of companies, had 2 exits. And that was really my entree into the early stage space. I started the group with a friend from college because we both were seeing a lot of interesting opportunities to make investments, but didn't want to just invest in companies that our friends founded because we like them and hope that they do well. That
Right.
felt like a fast way to lose your money. So we got a small group of friends together, started meeting once a month, and over time it's just grown very organically. And then at the end of 2014, was contacted by Samsung about potentially joining the Global Innovation Center in an investments role. And just for sort of background on the Global Innovation Center, Samsung is a really interesting company. It's an incredibly innovative one. It started as a noodle shop in South Korea and has grown into a conglomerate of many, many companies. The largest and one is Samsung Electronics, which most people are familiar with. It's a company that's very dedicated to innovation. We spent over $14 billion in R&D last year, and we're actually awarded more U.S. patents than Apple or Google. So incredibly innovative place and very large breadth and depth to the product offerings that Samsung has globally. But recognized, several years ago that the world is changing and innovation is coming from many new places, particularly innovation around software and services. And so a gentleman by the name of David Unn proposed starting this new group of people that would be made up of operators and entrepreneurs and investors who come from startups, come from those ecosystems, and understand what it's like to try to build an early stage business. And so our purpose is to really take great startups and turn them into greater businesses by helping them scale through Samsung's global reach. And so we do that through a few different ways. We have an accelerator, which is based here in New York that I work out of, as well as in San Francisco and Tel Aviv. We work with sort of ideation, very early stage companies who co-locate with us, and we help them build and launch a software service product in the market.
Those companies don't have to go through the accelerator themselves.
Correct.
Investments outside of that as well.
Correct, yeah. So we try to find ways to work with companies throughout their life cycle in whatever way makes most sense for them. So for some, it's coming in and co-locating with us and having the resources and mentorship of more sort of hands-on help. For other companies, it's looking to Samsung for not only investment, but also people who can help them find the right individuals to collaborate with within businesses from a strategic perspective. We have a group that's focused more on growth initiatives and partnerships, so slightly later stage companies that are looking to accelerate their scale through Samsung. And then also a business development team that does, works on acquisitions and other kinds of collaborations with early stage companies. So we have something for everyone, regardless of sort of what they do, where they're located, or what stage they're at. We can help them build, grow, and scale to whatever their next level may be.
In the accelerator program themselves, how does that exactly work? Is it traditional kind of a 3-month accelerator like Techstars or something, or is it more along the lines of an incubation period, or how much of it is curriculum, and kind of walk through that?
Sure. It's not a traditional accelerator program like many people may be familiar with. Here in New York, we have a couple of themes that we're particularly focused on, VR, IoT, and AI amongst them. We look for fantastic entrepreneurs, people who have built products before, understand how to put a team together and build and launch something from scratch. Sometimes they come in with an idea, and we're excited about that idea and want to fund them and be their first money in the door and help them build and launch that product. over the first several months, often anywhere from 6 to 12 months. We also have an EIR and entrepreneur in residence and hacker in residence program. So people who we just think are really talented and are going to come up with something exciting could come in and work with us for a period of time, usually 3 to 6 months, and try to come up with something that they want to do next, whatever their next project is going to be. And then we can continue to work with them if it makes sense for us. So it's a longer term sort of proposition than the standard sort of 3 months programming, co-locating, demo day, raise money. We're looking for a much more hands-on approach. We like to be the first money in the door, and working with these companies over a longer period of time to make sure that they get to a point where they really can grow and scale from there.
So you've been on both sides of the table as an individual angel investor, and now with the backing of a major corporation of Samsung and all the resources that go around that. Talk a little bit about when you're talking to a founder about investing. What are the differences from being an individual angel versus a corporate venture, and what are the kind of the good, bad, and indifferent things that you hear from founders in that about traditional venture capital versus corporate venture capital?
Sure. With my angel hat, I'm always investing in seed stage companies. And so oftentimes those are companies where I'm more than anything looking for a really great founder that I want to spend time working with. One of the best parts of being an angel is that you can often be hands-on with early stage companies in ways that you aren't always able to. Maybe when the cap table gets bigger, there are more investors involved. But at the really early stages, you're working often one-on-one with these CEOs, these founders or founding teams. And so oftentimes I'm mostly looking for someone that I want to personally back and spend time with. Who I believe that regardless of where their product may end up, because oftentimes they are still figuring out their product and their product market fit, that they'll be able to surmount those obstacles and come out the other side successfully. And so I spend a lot of time thinking about the people that I'm investing in. That's absolutely still true at the point where I have a VC hat on and thinking more often at the Series A and sometimes Series B stage. But at Samsung, we are both strategic and financial investors. Angels, I think, generally obviously want to get their money back, but often should absolutely assume that they are not going to get anything back. And so they tend to do it for other more altruistic reasons. They enjoy meeting with lots of entrepreneurs, sharing their experience and advice, getting hands-on if they want to. It's very different than when you are investing money, particularly from other people, where you have a financial motivation to return capital as well as more. But also, for us, we have a strategic obligation to make sure the companies we're investing in are ones to which we can add value and can add value to Samsung in the right ways at the right times. And so it's a slightly different lens. In addition to obviously looking for a great founder or founding team, we also need to make sure that it's a market that makes sense for us. You're not going to see Samsung Electronics investing in restaurants and hotels, for example. That's not core to our business and not something that we could be as helpful for. But making sure that the companies that we're supporting and investing and the entrepreneurs that we're backing are ones where they're doing things that are relevant for us and that we can be helpful to.
You may have seen Fred Wilson in your backyard in New York with Union Square Ventures had a post recently about how founders shouldn't really look towards corporate venture as their money. What are your thoughts on that, corporate venture versus traditional venture?
I would respectfully disagree with Fred. I know plenty of VCs on both coasts and elsewhere who are not fans of corporate venture teams, and I certainly understand some of their concerns. Historically, I think corporate venture often leaves a bad taste in people's mouth, in part because of sometimes the ways that corporates go about doing it. Oftentimes, they take people from a corporate development or a strategy team and repurpose them for doing venture investing, which is not the way that we do it at Samsung. Our venture teams, we have multiple teams at Samsung. I'm on the early stage software and services focused one. We are all people who come from an investing and operating background. And so this is what we do and what we know. I think that's very important. So I certainly recommend that entrepreneurs work with corporate venture teams and take money from teams who understand early stage investing, how these companies grow and work and function, what those roadblocks are going to be, because otherwise it can be, I think, a very strenuous relationship. The other, there is also a number of huge advantages to corporate venture money for entrepreneurs, in part, as I mentioned before, because, oftentimes we're both strategic and financial investors as opposed to purely financial. Some are also even purely strategic. There are some who make venture investment with much more of a strategic eye than really even financial. And then, oftentimes that can allow corporates to give much better, friendlier terms to early stage companies than financial investors who share responsibility to get as large a return as they can for their LPs. So if you find a corporate that aligns with your interests, your product, your business, your market, and has a team of people there that you are excited to work with, I think that can be a hugely beneficial opportunity for an early stage company. But a lot of it does depend on who you're working with and what the value is that they can bring.
So if you were talking to a founder about some of the things they should be looking for in corporate, either accelerator programs or in a corporate venture arm, what are some of the tips and tricks and kind of things that you've seen that are good for founders to know going into that conversation?
I would definitely say the first one is understanding the background of the people that you're dealing with and also how they're compensated. How are they being measured from a job performance perspective so that you understand what their motivations are in working with you. That's very important. Number two, I would speak with as many individuals who have been in sort of your shoes interacting with those entities as possible. So whether, if it's an accelerator or an incubator, talking with other entrepreneurs who have gone through those programs or been part of those communities to understand the contrast between whatever the sales pitch is and what you actually get when you're there. I think that's really important. And then thirdly, I would say making sure that whatever it is that you want to do lines up well with what the goals are of that organization. And that's something that you have to talk through with the individuals who are either making the investment or running the program that you may want to be a part of. Frankly, I think there are plenty of corporates that either make some small investments or run programs because it's cool to be part of startups right now, sort of what everybody's doing, but really understand why they're doing it and what kind of senior sort of cross-institutional support they have within the organization for what they're doing. Is it a small team of people that have a little bit of money and can go out and do some interesting stuff? Is it a large team that's been around for a while, has a history of making follow-on investments, investing over many, many years, running multiple programs, whatever it is, so that you can understand what's the longevity of what they're doing. Because obviously, one of the first things to go in a corporation, things start to go badly economically or otherwise, could very easily be these kinds of activities. And so you want to understand what's the long-term commitment, the long-term goals, how important is this to their core business.
Switching gears a little bit. So you're based in New York, and you work on the coasts and in some of the larger markets, but you're obviously from the Midwest, and you've seen startups being built everywhere and working with Midwest accelerators like the Brandery and that. What are some of the differences that you're seeing or some of the trends that you're seeing outside of the big markets, and why corporate venture and angel investing are important and are happening outside of the Valley?
I think particularly for corporate, it's interesting. Cincinnati, where I was born and raised, has an incredible number of Fortune 500 companies that people don't even realize are based there. We've got Procter & Gamble, Federated, which owns Bloomingdale's and Macy's, Kroger, which is the largest grocery store, I believe, largest grocery store chain in the United States, that are all based in this Midwestern city that most people have probably been through the airport but probably never visited. And that's true of a wide variety of cities around the country. And I think what's amazing now is that because it is in many ways so cheap and easy to test an idea and to start something, you can really do it from anywhere. As long as you have, the will to do it and access to good support and talent around you, you can really start something anywhere. Depending on what you're doing, it may require that in order to, you can start building, but to really grow and scale, you may need to get to a coast at some point. But oftentimes, the partners that you're looking for or the customers may very well be in your backyard or, an hour plane ride away. And so I'm very encouraged by all of the entrepreneurial activity that I'm seeing in, places like Charleston, South Carolina, and Nashville, and Chicago, and Nebraska, and all these different places that have so much talent and are very eager, I think, locally to find ways to support companies who want to be based there. From an investment perspective, we invest all over. I'm involved with a company out of Dallas. We've invested in Kansas City, Israel, and Egypt. So we go to where the great companies are. That's part of our job. I think for the accelerator, it has been traditionally, in the couple of years that we've been running it, has been more local talent. But from an investment perspective, that's why my team exists, is so that for the talent that's building elsewhere, we can go and find that and support it and invest in it. And stay close to it. So, I think what I am starting to observe a bit is that People are very mobile. They're very happy to be based in a place like Dallas, which, you can get to New York or San Francisco in 3 hours and do a day trip. I think as long as you're willing to, work hard and make the time, have those meetings and take those flights and be the places where you realistically will need to be for whether it's customers or investors or what have you, you can do a lot from many, many more places than Silicon Valley or New York City.
That wraps up another episode of Inside Outside Innovation. Thanks for listening. Big thanks to Christina for sharing her wisdom with us and for joining us again at the Summit, June 19th through the 21st. Talk to us on Twitter at the IO Podcast or at InsideOutside.io. Until next time, go out and innovate.